EPLI insurance, otherwise known as Employment Practices Liability Insurance, is a hot topic in the business world today. Is EPLI insurance the right purchasing decision for your company? Don't buy EPLI insurance until you watch this video. The Me Too movement of 2017 created many high-profile sexual harassment lawsuits and dramatically increased the purchase of EPLI insurance. March of 2020, the COVID-19 pandemic hits. The government requires many businesses, non-essential services, to shut down, and because of that, carriers took on a lot more EPLI claims. Layoffs start to happen, and those employees now bring lawsuits against their employers for terminating their employment and caused loss history, loss ratios, and claim payments to increase dramatically. The median EPLI award or jury award in 2020 reached $173,960, the most that carriers have ever seen, largely because of social inflation. You have this kind of double hit. You have the pandemic causing shutdowns and layoffs, increasing claims, and then of course you have social inflation causing a median rise in EPLI awards from juries. Again, $173,960. Because of these circumstances, we stand here today in 2022 with a large correction in the EPLI marketplace. And because of that, there's some things that you need to know. Now, the first thing you need to know is that most standard carriers, Hartford, Travelers, Liberty Mutual, Guard, they've started to restrict the amount of EPLI coverage that they will provide on their commercial package or their business owner policy, otherwise known as a BOP. Guard, who is a Berkshire Hathaway company, was able to provide our clients, regardless of their industry, $500,000 EPLI limits with a $500 deductible. Now, come 2022, a lot of those policies that are coming up for renewal, we're finding that the carrier, in this case Guard, is dropping the limit from $500,000 to $10,000. Now we have lots of businesses that have been protected, that have been able to sleep at night. If a claim comes in on the EPLI issue, it's almost as good as first dollar because it's a $500 deductible. Turn it over to the insurance company, you get an invoice for $500, you're on your way, right? In general, very good protection. We've seen the same now from other carriers. Hartford dropping limits, Liberty Mutual dropping limits, Travelers restricting limits. When things become hard and your everyday carriers are no longer an option, we go to what's called the excess and surplus lines marketplace, otherwise known as non-admitted carriers. Carriers that can do business without having to file everything they do or their rates, all their forms, or the structure of their policy with the Department of Insurance. In this case, we're in California, but in any state department. Sometimes people call it the secondary market. I don't like to refer to it as that because I actually really like the surplus market. Does great things for our clients, fills a great void, especially in times like this. When you look at EPLI insurance in the secondary market or the E&S market, you're going to look at it on a standalone basis. No longer part of a package like I was talking about before. When we're talking about straight standalone EPLI, you need to understand the policy forms and the coverage provided. Unlike admitted programs, E&S carriers can form policies based on market conditions, and I said this before, they can price based on market conditions. So you need to understand, remain in tune with the offerings, but hire a broker that understands the marketplace. A few critical items to consider. Self-insured retention, or SIR, is not the same as a deductible. If you purchase EPLI from an E&S product, you're most likely going to have a self-insured retention on your policy, not a deductible. And we see self-insured retentions range anywhere from $10,000 to $250,000, depending on the industry, depending on the history, depending on the size of the firm. SIR is a dollar amount specified in the policy that the insured must pay before the insurance policy responds to a loss. If you have a $25,000 SIR on your EPLI policy and you get sued, you know that you have to pay out that first $25,000 by retaining an attorney, by legal counsel, by claims adjusting, whatever it may be. But once you hit that $25,000, you turn it over to the insurance carrier, and that $25,000 is the most you can lose. Considering the SIR, is an EPLI policy right for you? There are cases where businesses can settle employment-related suits under the SIR. Some companies may fare better without coverage because if you consider the amount that you can settle an employment-related claim for without paying the premium, your premium is $25,000, your SIR is $25,000, there's $50,000 that you're already into the policy on the first claim. What if you can settle a case for $10,000? Maybe you pay to your attorney $5,000, you settle for $10,000, that's $15,000, you just save $35,000. There's a lot of great things that come with the EPLI policy, but the SIR is important to understand. Second, sublimits may apply to specific sections of the EPLI policy. For example, wage and hour coverage. Wage and hour coverage is very important to most business owners because, according to Advisen, wage and hour law violations are one of the largest employment practice risks employers will face. The law requires employers to pay employees for all time worked, including any activity that is part of the job before or after they clock out. The rapid evolution of wage and hour exposure makes underwriting and pricing complex for insurance companies. Lots of wage and hour issues, lots of wage and hour claims. So how do insurance companies manage their exposure? They put a sublimit on the wage and hour coverage. So instead of that $1 million limit that you have on the policy, now your wage and hour sublimit is $150,000. I've seen it as low as $100,000. But guess what? The SIR still applies. So let's say you have a $100,000 wage and hour sublimit and you have a $50,000 SIR. It's still not the $1 million, and people don't realize that. People don't realize that the sublimits could deteriorate certain sections of the EPLI policy. Finally, you need to review and understand the exclusions on your EPLI proposal before you purchase coverage. There's not a single EPLI policy on the marketplace that doesn't have exclusions. In fact, there's not a single insurance policy on the marketplace that doesn't have exclusions. Some standard exclusions that you want to look out for: intellectual property, prior notice, ERISA, and of course the hostile work environment. Most policies also contain no duty to defend, which means that if your policy has an exclusion and if a complaint is brought against you because of one of those exclusions, the carrier has no duty to provide defense to protect you against the lawsuit. In other words, your insurance company will not defend you in a lawsuit for an excluded offense. Now you're burdened with the expense of retaining legal on your own, possible judgment. And if you lose the case, you're paying out the indemnity. So understand your coverage so that you can best protect yourself. Now, we still believe that businesses must consider EPLI in every single situation. That doesn't mean that buying an EPLI policy is going to be right for every business. I witnessed many clients' businesses saved by the protection provided by an EPLI policy. If it wasn't for the policy, they wouldn't be in business anymore. The average cost to defend an EPLI suit is $200,000 per claim. That's a big number. The average award is $250,000. And if a case settles, the average judgment is $75,000. Big numbers for lots of small businesses. If you have any questions about EPLI, we know what we're doing. We understand the marketplace. There are many brokers out there that understand the marketplace. Reach out to a local representative. Reach out to your broker. Reach out to us. You can call us at 858-384-1506. Ask for one of our agents. If you enjoyed the videos, if you find them helpful and useful, please support us by liking our videos, subscribing to our channel, clicking that little notification bell that you're made aware of any future videos that we release. Happy holidays to you and your family, and we'll talk to you soon. Take care.